the team was able to execute, and we attained the results and even better results than we expected. This year, all of these years has been transformational, but this is a total transitional year into total profitability and higher production.
Good morning, everyone. It's Andrew with The Market Mindset. Today, we're going to be talking to an energy company out of Alberta, Prospera Energy. This came across my my screen and also my phone of a couple of people I know, and I wanted to follow up with them because I've been doing digging of my own. They've done a lot of work since 2021, and I want to see what's in store for them in 2024. We've got Prospera Energy. We have Samuel David, who is the president and CEO, as well as Chris Ludtke, who is the CFO. Welcome to The Market Mindset.
Good morning, Andrew.
Thank you, Andrew.
So this, to my kind of look, is a story, long work, hard work for you guys, but this could be a launching year, 2024, for Prospera, and we're always looking for opportunities in the, especially energy space and in transition space, that are they're mindful of the environment, they take that into account, and they're adding value that's asymmetric, better, there's a big upside. And it seems like you can walk me through the history of the company and all the work you've put in. You've gone through a lot of stages to get to where you are now, and there seems to be quite a lot of anticipation in forums and from people I hear that this could be a breakout year.
That is correct, Andrew. Prospera, the restructured Prospera management team, is very excited about the 2024 outlook. This is the transition year, we believe, to profitability. As you mentioned, Prospera has gone through a lot of heavy lifting in the past few years. The restructured company commenced its restructuring of the company back in 2021 with a three-phase development plan. The first phase was to optimize and bring Prospera to safe operating conditions and at least break even. And the second phase was strategically aligned with the reservoirs at hand to transform from the vertical technology to horizontal technology that allows us to reduce environmental footprint of numerous leases and eliminate them or abandon them. And not only are we reducing our environmental footprint, but we're also reducing operating costs over time for the company. Now, that's the financial side, but the transformation from vertical to horizontal allows us to access undrained reserves. And further, Prospera went ahead and to diversify the product mix, because the horizontal wells was related to the heavy oil. And we exploited a new acquisition, a medium light oil as well. And both of these results exceeded our expectations. The horizontal wells came out higher than the type curve at 100 barrels a day, resulting ensuring us substantiating that we are accessing undrained reserves with these vertical wells, and we also abandoned them. Prospera has already abandoned nearly 100 locations, and the results of these reduction in operating costs will show up over the next few years. The medium light oil results was exceptionally exceeding our expectation. Our type curve was 60, 70. We said maybe anticipating 100 barrels a day, but the medium light oil came on at 500 barrels a day flowing. And we, after 3 months or 2 months here, we just put a pump on it and it's still doing 300 barrels a day. We could kick it up a notch. So the results have been exceptional. And that translates into fantastic economics, especially if the prices, anticipated prices that are going to rise. So this last 2-3 years has transformed Prospera, and now it's transitioning Prospera into total profitability, perhaps just 90 days of payables turnover, less than 90 days. And it'll improve all financial statements, balance sheet parameters, reducing deficit that was there before. So overall, Prospera, the restructure management team, is very excited for the outlook for Prospera and the stakeholders.
And these, and you can tell me if I'm wrong, I'm going to take a step back. So some of my subscribers who may not know like drilling is that it's kind of like taking a straw, but a bendy straw where you and go out and some of these enhanced oil recovery, isn't it some of those wells could have anywhere from 30 to 70% still in the reservoir, still, you know, product there, and that in any well, and you're thinking maybe 20 to 40 or somewhere around there?
Okay, so the drilling is, yes, is oversimplified. Yes,
Yes.
but you know, people always think you're going to come down and you go directly horizontal. In reality, we're going really, you know, deep, and only the last bit is a little bit bent. So if you really look at it, it's just like a little straw like this, but it's not L-shaped. Okay,
Yeah.
but these are legacy fields, and there's a lot of data we study, and there's a lot of technical things we study, and we're reservoir management people by background, so we recognize there's a lot of remaining reserves in place, and also only old vertical technology was applied to this, and also by increasing the reservoir exposures increases your recovery. But it's not only that. The horizontal allows you larger exposure to reservoir to produce, and it's also you don't need so many vertical wells along the way. You're eliminating it, and then further, because of reservoir management, we also will alternative horizontal wells will turn it into a injector that we're going to inject fluids, not foreign substance, you know, that is conducive and it's environmentally friendly and it's natural stuff that was already produced. We put it back in instead of introducing foreign materials, which is different from other companies or perhaps others. Is we're not just there to have immediate enhanced recovery, but a longevity. So we have a reserve life and reduced environmental footprint and lower operating costs, just minimal disturbance.
I'm glad you kind of walked us through that because it gives more, it highlights where you stand out in that space and competitors that would be doing the same thing, because there's not a ton of companies taking this technique, but that also means that with success there would be a lot of opportunity to take what you're doing and to really optimize it, not only on your own properties but elsewhere.
That's right, Andrew. You know, the thing is, we had this development plan, but we executed it. You know, the team was able to execute, and we attained the results and even better results than we expected. And the team is gelling, and so it allows us to execute. You know, we know we can execute, and we got good results. So this year, all of these years has been transformational, but this is a total transitional year into total profitability and higher production.
And maybe just before we get into some maybe the numbers and kind of where you think like the commodities are going, like light oil as well as heavy crude, what are some of the things you can talk about for 2024 where you're kind of putting milestones? Because often we don't look at a stock's price necessarily as being the key factor to anything, because sometimes there's a mismatch between the market's just missing something, they're not paying attention, or it's an unloved market or whatever. So if someone was to go, listen, I want to, you know, just to see what you guys are doing, if you hit expectations, hit milestones, what are some things in the near term that they should be watching if they're kind of putting your ticker now and they've added it to a list to keep an eye on?
That's a very good question. So Prospera has appreciated its production from 80 barrels to 600 BOEs to 1,000 BOEs, now 2,000 BOEs, and we expect it to exit this year at 5,000 BOEs. Consequently, the net present value of the reserve value has risen from, I think it was negative $3 million, but I'll say $6 million to 39, I think, and now it's $72 million last year-end reserves. But we drilled some really good successful wells this year, and the NPV value could be above 100 million or 100+ million. for year-end reserves at 2023. And you can see what that at 2,000 barrels of BOEs a day, what it could be when we go 5,000 BOEs a day. The market cap is lagging, and especially with this reserve value coming up, and better financial results and the outlook for 2024. You know what that translates to, an opportunity, a good opportunity, because we've already done the heavy lifting and we're executing. The reserves is proven and it's substantiated by a third party. So it's a great opportunity.
What's great about that too is that I mean, you could have just rolled back shares. You could have just started over. There's a lot of things you could have done, but I like it when someone doesn't. They say, no, there's obligations from the past. We're going to come in. We can meet those. We could restructure it. We could deal with it. We can resurrect this company, and not only do that, but do it pretty fast, really, and be where you are in this profitability sector. 35 million market cap, where I mean the reservoir value is that's a win on a lot of factors as far as I'm concerned, because we work in mining a lot, and you can see a company doesn't hit 1 year, they just roll back, boom, it's done, cleared off, and that people get accustomed to, unfortunately. But this is a way you got to keep old shareholders, which are happy because someone's coming in and doing the right thing and doing right by them, and attracting new money to a story. And I think there's something very positive about that whole just narrative.
You're right, Andrew. I mean, we've done all the heavy lifting. When I started the restructuring in 2021, I had a lot of hair on my head,
I understand.
But there's been a lot of effort and coordination and tremendous teamwork. And that's the main thing, is we got a lot of experienced professionals here, and it's a very collaborative team, not only within internally, but externally with the service providers and the stakeholders that are involved. I'm really excited to give, in many returns for the stakeholders that have supported us this year, or so far.
Yes, and that's great. So maybe we can shift a bit to just talking about the market in general, so the energy sector. I mean, Alberta is the energy powerhouse of this country. What do you think? I mean, there's lots of news out there about energy, and Chris, you can jump in as well. What do you think the year ahead? It's hard to, and I'm not asking for any price targets on. Those are terrible to try to forecast. But what do you think about just the energy sector as a whole in 2024 moving ahead?
I mean, I think in general, we're seeing a pretty favorable commodity pricing environment. We're currently seeing $75 US per barrel pricing, which is certainly economic for most of the producers in Alberta. We're also seeing an improvement to the heavy to light oil differential, or expecting to see that improvement here, not only as we head towards the summer as heavy becomes more in demand, but also as the Trans Mountain pipeline comes on. I think they're projecting to begin line fill this April. So that's going to take a considerable amount of oil, not only just to fill that line, but also to be able to start to produce for heavy oil to be able to get to sea and access other markets than just the US. And so it decouples us a little bit. So we expect to see some improved pricing from that standpoint as well.
Alberta, as Andrew mentioned, Alberta and Saskatchewan. Is the energy or natural resource capital of Canada. And yesterday we were at some talk, Carlson Tucker. And, and Dr. Jordan Peterson, I believe.
Yes, yeah.
And Danielle Smith, and it was very enlightening to discuss. And Carlson was saying, in Toronto we have all the banking and all the trading business, but is that real business? It can exist without other, this natural resource business. And, I don't like to debate that. I always thought Alberta and Saskatchewan, we do something tangible. Yeah. It's tangible. It's necessary. Yes, there's a transition and outlook of, fossil fuels and renewable energy and all of that. That's all great. I think we could have a balance of all of that. But to shunt one field or a industry and changing over to another industry is a political decision without further look at ramification associated with. For example, they said solar panel. Solar panel, yes, produces, but in Alberta, you put it on a roof and or Saskatchewan. Well, we got snow most of the time.
Yeah.
Who's going to go and brush all the snow off the panel all day long to produce very little energy? How much sunshine are you going to get? And Daniel Smith was pointing out, if the grid goes off just for an hour, 60 minutes, so many people are going to die.
Yeah.
How important is that when reliance? So reliability with balance of renewable, let's all work together. But fossil fuel is essential part of energy.
Absolutely. We're part of our channel is to bring that sensibility to a lot of the political grandstanding living out in BC, whenever I remind people we're going to be using oil and gas for decades and decades, they always get upset. But
Yeah.
Listen, this is reality. And also, you've been getting, a lot of negativity about an industry that there shouldn't be. And that is unfortunate. And people know we love nuclear. We think solar panels are cool. Geothermal can work depending where you are, but it depends on where you are. Because sometimes, like you said, turbine's not going to work. Solar's not going to be that effective. Batteries will freeze, or they could become massively cost out ineffective.
Having said that, Andrew, even Prospera, one of its objectives is environmental social governance. This horizontal transformation allows us to reduce environmental footprint. So it's not eyesore wherever you see. Prospera just began. It's not there yet, but it's initiative. We've already looked at emissions. We're putting, we're already below the emission standards, but we're totally going to eliminate emissions. And the environmental footprint, emissions, and all of the innovation that is ESG, it qualifies that is an ESG innovation is what we're going to employ in Prospera. It's going to take time, but Prospera intention is to be environmentally, socially, and the governance is our objective.
And I know from my own reading that can be done, and what we're hoping as well as in a channel is to get out to people that it can be done, because once again, they might look at think of oil and gas from watching like Dallas in the 1980s or something. They don't know. No. They have no idea, and they don't know the work that's been done in enhancement and in how to drill and in how to do it in sustainable ways. And that technology and those developments are not only they're not talked about, even if you do put them out, they're pretty much shunned as much as possible to get a other narrative out. So we love it when we see a company that recognizes that. And and working in mining, I've never met with a CEO that's ever said, "Oh, I can't wait to harm the environment." Everyone out here in mining, they live in Vancouver because they love being outside, enjoying hikes and whatnot. They're very, very critical of what they're doing in regards to displacing of anything. And to this day, I have not had anyone that I would have been questioning on that. And that's a narrative too that falls over into oil and gas or any, whether it's helium, drilling companies we've talked to. It's always genuinely on the forefront of their minds. And it's right on your website right at the beginning. It's something that pops out.
And that is our objective and our intentions.
And speaking about just not only the effect of less emissions because of the technique and how you're doing things, is also your costs have, I believe I've seen one video where it's dropped out significantly from what you're even projecting. And so for you to get cost per unit well down, especially in high inflation, let me tell me a little bit about that.
Certainly on the production side, there's certain things under our control, Andrew. One of those is operating costs. We can't necessarily control the price, but we can certainly control how well we produce it and how efficient we are in that. And at the end of the day, the lifeblood of an oil and gas company is its cash flow and how much cash flow it can produce. And that's slightly different perhaps than some of the junior miners. But what we focus on is how cheaply and efficiently we can lift that oil out of the ground and get it off to market. When the company was originally taken over, operating costs per barrel were in excess of $60. Last year we reported approximately $38 a barrel. This year we're going to see fall down to roughly about $33 a barrel for 23, and 2024 we're going to come in under 30. We're targeting 25 or less.
That's excellent.
With the new production that we're bringing online, so on and so forth, and this is going to allow us to add considerable amount of cash flow. You know, Sam hit it early on. The big key for Prospera is that it's sitting on a massive abundance of reservoir, and it's only recovered about 8% of that so far. These fields were developed by Nexen back in the 90s, especially these Saskatchewan fields. There's infrastructure in place in terms of pipeline and processing capability. So we're adding, we're simply drilling wells and tying them in immediately, and then able to produce at like I said, in the 25 or less dollars per barrel for just operating costs. And so that's going to be seriously accretive on a per share unit going forward.
And just to get people's context, just looking at your site here, that's like 500 million barrels of oil in place.
Correct.
I mean, that's pretty huge, and I'm glad you got that out, because that puts things into context as to someone goes, well, what's the scope of where we can take this? And that's 8% of 500 million. It's pretty outstanding.
The reserve, if we do this properly as we are executing, the reserve life index of these fields is going to be 25 plus, but I were to say 40 years or so. It'll be well beyond me here.
Well, that's excellent. Well, guys, is there something we should cover or you want to touch on in the short term? I know when we look at companies, we look long term at what they're doing, and we look at milestones. But if someone says, okay, you caught my attention, is there anything they should be keeping their eyes open for the next couple of weeks or months, just to see, okay, they're continuing to progress?
Well, as I mentioned, we have executed and proved up the concept, and now it's just modular development. Look for us over the next few quarters. There's strategic acquisition that supports our growth as well, to diversify our product mix from heavy oil to light oil, and so that you know, there isn't vulnerability with the differentials, heavy oil differentials, that stabilizes our profit margin going forward. So it's a transitional year into profitability, and robust growth plan, low risk growth plan here, and we're excited.
Excellent. Well, thanks so much to you, Samuel and Chris. I appreciate it. We've got our eye on you, and we're going to keep looking to see what's developing in 2024. And it was a real pleasure speaking with you.
Thank you, Andrew.
Thanks for having us on the show.